All right. So let me share my screen and let's take a look at the economic calendar. So what I like to do to start my week off, share my screen here. I am not using my multiple monitors. So what I like to do, again, this is the S&P 500, but we'll come back to this. What I like to do is just go to the home screen and go to the economic calendar to be able to find news to see, okay, which way should the market be moving this week, right? So what you can do, and this is TradingView. If you don't know what this is tradingview.com, one of the best charting platforms I think exists currently. It is free to use. They also have free trials and premium plans, but really, really strong platform once you get the hang of using it. So what I'm going to do, I want to go home, and then let's go to products, and then we're going to look at calendars, and then we're going to look at the economic calendar. So the government was closed. Let me move this up. The government was closed for what, like 30-40 days. Again, I kind of lost track of time while I was out in Japan, but the government is back open. I think Trump signed off on the bill to reopen the government, and this government is slowly picking back up. So with that being said, we should be getting more reports on a normal cadence. If you've been trading for a while, you know how impactful these reports are on the market. For instance, you can get a job data report that says that jobs are going down, and then the market can go down. Or you can get a job data report that says that, you know, jobs are improving and the market goes up, or vice versa, right? So anytime you trade or invest is very news heavy, right? A lot of it is technical analysis, yes, but a lot of times the major events or catalysts that shift the market one way or another comes from news. And so what we like to do is try to get our, try to get out ahead in front of, news and reports to see what can happen. So right now we're looking at the economic calendar. I see on Monday, the 17th, we don't have anything major, and I have the only high importance toggle turned on, which if I turn it off, it'll just show me everything. So it's not saying that nothing is happening. Scroll all the way back up. It's not saying that nothing is going to happen Monday, but it's just saying based on the algorithm that TradingView uses to, find high importance events, nothing really important is happening. Again, we do have some Fed speakers speaking on Monday, but there's nothing officially scheduled or booked that's going to be happening that's important Monday. Tuesday, same thing. We don't have anything major. And again, I can turn off this only high importance and scroll down to Tuesday to kind of see what's going on. We got some numbers coming out for production numbers year over year, industrial, manufacturing, and import prices. So import export prices could be something to pay attention to because of the whole tariff situation that Trump started back in, or he mentioned it in April, and it started in, I think, March. No, he mentioned it in January and it started in, I think, March. But yeah, all right. So nothing major on Monday and Tuesday. Cool. So Monday and Tuesday is just going to be driven by news, by current events and technical analysis. Wednesday, we can see that we have building permits preliminary, which nothing major. We got housing starts, which that could be interesting because a lot of people have been watching the housing market. They've been waiting for the housing market to cool off to try to buy houses or to try to sell houses, the whole nine. So we'll see what this housing starts data looks like. This is going to come out 8:30 a.m. on Wednesday. So that's going to be important. But I think the big thing that you want to circle on your calendar is going to be this FOMC minutes. So anytime you trade, we got more people trying to join. 1 second. Let this person in. There we go. So anytime you're trying to trade, what you want to do is figure out when the Feds are speaking. The reason why you want to figure out when the Feds are speaking is because the Feds control our money, right? They pretty much tell us when interest rates are going to be cut, when interest rates are going to be paused, when interest rates are going to be increased. So everybody has their eyes on the Feds. And so this is going to be the first Fed minutes that we get. So this is pretty much the Fed minutes is pretty much the notes from their last meeting. So we get to see what they're thinking. Like we just got 2 rate cuts, which was good. They said that we should get 3 rate cuts by the end of the year. It is now November 16th. So if we get 1 more rate cut, that'll be them making good on their promise. But I'm also hearing that the Feds are saying, hey, we may not, based on the data that's been coming out, we may not get a rate cut. We may need to pause. So Wednesday is going to be very important for the market. It could either send the market further down because, again, the market has been correcting to the downside, or it could send the market up depending on what the Feds say. So Tuesday, and this is at 2 o'clock Eastern Standard, Eastern Standard on Wednesday, we're going to see what happens. So again, circle this on your calendar. We'll see what the Feds are going to say. And then Thursday, we got existing home sales, which again, I don't think that that's going to be a major catalyst. We can see that the forecast and the prior is pretty much the same. And then Friday, we don't have anything major scheduled. So the only thing you pretty much need to worry about this week as far as scheduled events, again, Trump can just tweet and say anything, and then, the market goes wherever. But if we're talking about scheduled events, things that we can prep for, Wednesday, 2 o'clock, FOMC minutes. We want to see what the Feds are going to say. Hopefully we get this rate cut. If not, the market could pull back again. But again, they promised us 3 rate cuts. We already got 2. As long as they make good on their promise, we should see some decent activity in the market. Do I have any questions? And I'm not on my dual monitors.
What's the YouTube link? I want to look at it on my TV so I can see the screen bigger.
Okay, yeah, I can get that YouTube link for you. Give me 1 second. Stop sharing my screen. Normally, Mark has this. Man, shout out to Mark. Mark, if you watch this recording, I needed you today. Mark normally has the link for it. Let me get the link right here. Here we go. Boom. And let me put it in the chat for everyone. There you go. It's right there in the chat. Can you see it?
Yes, got it. Thank you.
No problem. All right. Back to sharing my screen. All right. So we took a look at the economic calendar. The next thing that I would want to look at is, okay, cool. Now that we know that the Feds are speaking this week, or the Feds have a conference or some conference notes coming out Wednesday, cool. Let's check the rest of the market. So the first thing I like to do is check the S&P 500. So let's go to the SPY and let's see what do we have. So I like to check the S&P 500 on the daily time frame first. Then I like to move to other time frames to see where it's at. So currently the S&P is at $671. It is pulling back. We've had again, it's been choppy since I left. When I left, I think the S&P was at like 680 something, 685. Now it's at 671 and it's been moving down. If you're wondering why I have these blue levels placed on my chart, is because I had a conversation with one of my mentees earlier and they were talking about, okay, what is the condition of the market, right? A lot of people are saying the market has crashed, the market has pulled back, but normally a market crash is normally beyond 10%, and anywhere between like 10 and 20% is categorized as like correction, super bear territory, crash, right? Because if we look at the criteria of the crash that we had back in March, the S&P 500 was at about $572 and it crashed all the way down to like 478, right? So that was a crash. It was a sell-off that sent it down about 16, 17%. And again, that was more than 10%. That was a crash. Even though it was a mini crash, we've had crashes before that was like, 30%, 28, 27, high 20s. But 16, 17% on a pullback, I would categorize that as a crash. And then the market recovered and kept going. So when people are looking at the S&P today, again, the S&P 500 is a basket of the best stocks, top 500 stocks. So people are looking at the S&P 500 as a gauge to see where the market is going. So right now, if I just move this up, let's say where we are today, right? So the high, and I'm gonna zoom in. For those that don't know, when you're looking at the daily time frame, while I'm explaining this, every single candle on this chart represents how much the stock moved, whether it's up or down for that day. So if it's green, the stock went up that day. If it's red, the stock went down that day. So this giant red candle, excuse me, giant red candles, how much it went down that day. The small green candles, how much it went up that day, vice versa. So regardless of the size of the candle, it tells you how much the stock went up or down that day. And if you need more help with like candle structure and candle anatomy, again, I do have a beginner session on Saturdays and sometimes Sundays. So if you want to jump into those, it is available from 10 a.m. Again, those are free as well, from 10 a.m. to 11 a.m. Eastern Standard. Yeah, just, hang on a little bit after class, and then I can get you the links for those as well. All right. So where are we today? So the high that we had reached was about about 690, right? So if I use my measuring tool to pull it from where we are today, so from the high to where we are today, actually we're about right here at 671. We're only down like 2%, right? A correction or a crash, let's say we just use the, same numbers from the last crash, was about 17%, right? So if we go 17% down from here, I gotta scrunch my screen up some more. 17% down. We'll do it. Try to get it on 17 even. There we go. We'll be at 572. So pretty much to get back to where we were again, I say 10%, but I'm just using the 17% because that's just what we had in March. If we drop 17% again, this would mean that we will lose $100 from where we are today. And that means we still have a long way to go. We only at 2.68%. 17% is all the way down here. Let's say if we just drop 10%, right? 10% would be right here. And I can place my line. 10% would be right here at 615. So if we drop down to 615, that's 10%. That's when it's like, okay, people should, get worried. The fact that we dropped from, 686 or 690 down to about 671. I think we got even lower at an extreme. We got down to about 665, but then we pulled back up. So the fact that we dropped about 2 or 3%, it is a sign to be cautious. But until we actually break, this is the importance of support and resistance. Until we actually break this level here at 665.31, then it looks like we could just still be playing in between this range. That's the importance of being able to set your support and resistance the right way, just to give you a realistic picture of what's going on. So when the market opens tomorrow, we'll see if we break this 665. If we break the 665, the next level that I can see us coming down to is about 655. After 655, you got about 650, and then so on and so forth for to keep moving down. Now we move to the upside. What I have for us to the upside, let's say, we open at 671, 672, and we decide to move to the upside. To the upside, I have 680 first, and then we have 686 to the upside. If we break 686, we're going back to all-time highs around 690, and we probably hit that 700. Now, which way am I leaning, right? So I set conditions for the top side and the bottom. Right now, I'm still leaning to the downside because there's been a lot of reports that a lot of the top fund managers, billionaires, even Trump has been buying defensively. So anytime that investors are dumping like the top running stocks and they're buying defensively, that means that they're preparing for, a sharp pullback, right? And so this is the beginning of a pullback. We'll see what we get. But I'm also thinking about buying defensively, which a few of the stocks I'll show you like, okay, cool. If everything falls apart, what do we buy? That's always a good thing to know, especially if you're beginning, you're new, you're trying to build your portfolio. You need to know where to go if everything falls apart. And I know a lot of people are saying like, okay, I want to trade options. Cool. When everything falls apart, let's say, again, I'm just talking about to the downside because that's the buzzing conversation, right? If everything was to drop, let's say the SPY was to go down to 615, what do you buy? Two things. One, you go for equity, right? You go for shares. And you go for shares on the top performing stock. So you go for shares on, instead of going for shares on like an experimental drug company, you're going to go for shares on Apple, Microsoft, Nvidia, Tesla, Broadcom, the top 10 in the S&P 500, right? Google, those, the top, like I said, if you search the S&P 500, you look at the top 10 stocks, those are normally the stocks that you want to go for anytime everything comes down crashing, because those stocks are high flyers. Those stocks pretty much always outperform the S&P 500, and those stocks are going to give you some extra padding to your portfolio. And a lot of times those stocks are pretty expensive. Like, Microsoft is $500, Meta is $600, Apple is $272, Berkshire is $500. So if you can get those stocks at a discount, I would say go ahead. But yeah, so again, everything falls apart. You go for the premium, the best in class stocks. And then the second thing, so that's the first thing, you get equity. The second thing is that you look at leaps. So for my people who trade options, you go for leap contracts, right? And a leap contract is pretty much a contract that you can buy today when you're buying options that doesn't expire until, you know, a year or more, you know, out, right? So what I would do, again, this is not financial advice. I'm not a financial advisor. I'm just telling you my opinion. The SPY goes down to 615. Again, do I think it's going to go down to 615? Not yet. But if the SPY goes down to 615, again, I'm grabbing up shares on everything. And then I'm looking at contracts that do not expire until 2028. I may go mid 2027 or you know, early 2028. The reason that I would do that is because anytime you're that deep in a correction, like let's look at some other charts, right? Let's look at some stuff. So anytime you're that deep in a correction, let's say if you miss the mark, and a lot of people are going to try to time the bottom, like, okay, the bottom is going to be at 615. The bottom is, excuse me, the bottom is going to be at 650. The bottom is going to be at whatever. The best thing that you can do is just watch percentages of the pullback. After 10%, that means that the market has technically crashed, right? So let's say, you know, you're looking at the S&P 500, and the S&P 500 dropped. Where is 10%? Let's just mark 10% on this drop here, right? 10% is about right here at 515. Let's say at 515, you decided to grab calls that didn't expire for 2 years. Let's say you grab some calls that didn't expire until, this is what, April of 25. Let's say you grab some 2027 calls, right? And let's say you grab 2027 calls on the S&P 500. At 10%, you don't know if it's going to keep dropping or not, which it did. But let's say you said, okay, I'm going to grab right now, the S&P is at 515. The S&P has been up to, let's say 570, because 570 is where the drop started, right? And you grab some 2027 calls for 570 right here at this level. And the reason why, again, for my people who know charting, the reason why I would go with 570 is because this is where the drop starts. And then this is also where we have a lot of support and resistance. We have a lot of bounces. We talked about this in my beginner class today and yesterday. So let's say if we went 2027 570 calls, right, when the stock was at 515, for a few days you were in some pain, right? Because you bought the option when it was at 515, hoping that it would go to 570, but it dropped first, right? At some point it went all the way down to 480. But due to the fact, and again, I'm speaking to my option people right now, due to the fact that your contract does not expire until 2027 at this time, you're good to go, right? So you'll see a little bit of pain, and you could have bought more, right? You could buy more. Every 5% it drops after 10%, right? It got all the way down to 17%. So you could have bought again, let's say around like 480. You could have added more at 480. But look at what happened after that. So after the dip, it finally recovered. And so it recovered and blew right past this 570. So you would have made some really nice money just for aiming at 570 for 2027. 2027 hasn't even come yet, and the stock, after it recovered from this dip, we're all the way up here at 680. So let's say you're still holding this. You're up multiple of hundreds of percent because you bought the dip at the right time. So a lot of people, again, you're trying to find the market is red, the dip is here. You're trying to find the right dip, or you're trying to find the right level for the dip. Again, just watch percentages over prices. And I think that'll actually work better, especially for my option people. For my share people, you can do the same thing, but there's less at risk, right? With options, there is an expiration date. If the expiration date doesn't work out, you can lose a chunk of money. But you know, when you're buying shares, it's like, this is the S&P 500. The S&P 500 is always going to go up. I like to tell people that the S&P 500 is attached to inflation. Is one of the easiest ways I like to think about it. So as long as inflation exists, the S&P 500 is going to go up. It may go down for a year or two, but it's always going to recover and move higher. So with that being said, I'm just trying to get you all mentally prepped that for if the fact that, you know, the S&P 500 does drop, let's say it tanks, perfect. We don't have to panic. We already know what to do. We have a game plan. Okay, cool. It drops down. It's already down about 2 or 3%. It drops down 7 more percent. I'm going to start to load up heavy, right? It drops down another 5%. I'm going to buy a little bit more. This is why you always should keep cash on hand. I always tell my mentees this, like, look, don't ever get in a position. I don't care if the market this is the best the stock market has performed ever. You always want to keep cash on hand just in case the market pulls back. The market pulls back. Guess what? You have cash on hand. You can buy the dip. You can make more money, right? So you always want to keep some type of cash on hand for situations like this. You get, there are some people that's all into the market, and then when they pull back, they're getting crushed. And the market only pulled back like 3%. So this is where we are. And moving forward, again, these are the levels that I'm watching. So a big player is going to be the Feds. What are the Feds going to say? Did we get that third rate cut? Right now, it's looking like I'm still like 85, 90% on the fact that we get this rate cut. Now, do we get any rate cuts moving forward? That I don't know. But do we get our 3 promised rate cuts? I think so. Yes. And if we don't, then that could be really bad for the market. And again, for people who just have cash on hand, again, great time to go shopping. So we'll be watching that in the Discord. We'll be monitoring to see what levels the S&P 500 is going to drop through, and to see what are the top players to grab, shares on. And so with that being said, I'm going to look at a few other tickers before I look through y'all's. With that being said, let me stop. Do y'all have any questions? I know I've said a lot. Any questions? Let me check the chat. Ross says SPY got rejected at fib extension 690, fib 161 from April low. Yeah, Ross is talking some high level stuff for my beginners. Using fib retracement 618. 618 is about 610. So Ross, do you agree with me? So I said about 615. You saying the fib is saying 610. Same ballpark, right? I don't know if Ross is still in the chat. Yep, exactly. Perfect. Spot on. All right. So yeah, same thing. Watch the S&P. But that's where we're going to be looking at the S&P 500 again. Oh yeah, my bad. I'm sorry. I was reading the chat. Any questions? And if I can get some thumbs up, let me get some thumbs up in the chat if everyone is following along. If you're lost, just let me know. Boom. Okay, we got a whole bunch of thumbs up. Perfect. Cool. All right. Now, what to buy? Let's say, S&P 500 goes down. What do we look at? So my number one stock right now is going to be Berkshire. It's going to be Warren Buffett's company. So Warren Buffett has been amassing, and Warren Buffett and Berkshire, not just Warren Buffett himself, they have the most money, I think, out of any company in cash on the market. They have almost 400 billion in cash. Now, if you look at those, if you look at some of the best companies, on the planet, let's look at Apple. Apple has about somewhere around like 100 billion in cash, which again, 100 billion in cash is nothing to scoff at, but that's still not 400 billion in cash. Berkshire has so much money that they can buy about 400 companies out of the S&P 500. And there's only about 500 companies in the S&P 500. They could buy 400 of them. So with that being said, what do you think is going to happen? Who do you think is going to buy the dip? Berkshire. Everything falls apart. Guess what? People are going to be starving for cash. People are going to need money. And when I say people, I'm talking about these companies, and Berkshire is sitting on a pile of cash, right? So Berkshire, I've been following the news. They just made an investment with Google. They put about $4 billion into Google shares. I think that's just the beginning. I think that if Google pulls back even more, if the market decides to correct, Berkshire is going to add even more money into Google, because again, Google is one of the top players. I mean, Google is leading AI. Google has its hand in the robo-taxi arena with Waymo. I know here in Atlanta, you've probably seen all the little white Waymo cars driving around. So Google has their hand in that. Google is into data centers. Google is everywhere, right? So Berkshire, and the ticker that you would look at is BERKB. If you're using Robinhood, BRK/B. So sometimes it's either a dot or a slash, just depending on what you're using. So if you can't find it, you want the B shares. You do not want the A shares. Let me show you the difference. The B shares, you may look at this and say $509 or $508. That's a lot. If you go to the A shares, $763,000, and that is real. When I first started trading, this stock was trading at about 180 to 200,000, and I was thinking, like, who in their right mind would buy this? And whoever bought it when it was 180 to 200,000 is up handsomely. It's at 763,000. So it'll be our first $1 million stock on the market. But this is Berkshire A share. So don't worry about these. One day, right? But right now, Berkshire B shares is what we want. And they both move the same way. So with that being said, what I have for Berkshire B shares, and I have it in a wedge. It is breaking out of my wedge for my pattern, folks. I have Berkshire heading up to about 538 to 540. It does have resistance right here at about 520. So that'll be an area to where it can slow down some. But again, Berkshire, they have the cash. They could just dominate in a down market because they've been amassing cash for like 2 years, 3 years straight. But everyone has been chasing the AI race. And, again, the AI race has been nice. It's been, money's been made. They've just been literally stacking up on cash just for when everything falls apart, they can go in and buy it up. So good way to think about investing too is like you can amass a large amount of cash over 2 years, 3 years, just continue to watch the market. Once everything falls apart, deploy the cash, double, triple your money, and keep it going. So that's what I think that Berkshire is going to be doing. Again, they already said that they're, they already bought some Google, and I think that's just the beginning. But Berkshire, again, nice breakout. I got it going up to 520 for right now. After that, we should see 540. After 540, honestly, this could go up to 600, just depending on what moves they make. So Berkshire, again, this is from what, 2020. Let's start from the COVID drop. Berkshire was at $158 back during COVID. Today it is at $508, holding up pretty nice. All right, let's move on. Next stock. Forgot I was charting this one out. Next stock is going to be Microsoft. So Microsoft is the next company. And again, I know if you're looking at these stocks like, oh, they're $500 a piece, it is okay. We have fractional investing. You don't have to buy a full share. If you got $100 to put in, you can buy $100 worth of Microsoft, $100 worth of Berkshire, et cetera, et cetera. So don't worry about the price too much. But Microsoft is one I'm definitely interested in because, again, I'm thinking I just got to prepare myself. Worst come to worst, this all falls apart. Who's going to be the one picking up the pieces? Microsoft. Microsoft has a lot of money. They don't have as much as Berkshire, of course, but Microsoft has the tech to be able to pick up a lot of these AI companies and add their technology to their services to make, again, Microsoft a powerhouse, which Microsoft is already a powerhouse. But I'm just saying, if they can buy these cheaper AI companies for pennies on a dollar, they're going to do it. So Microsoft is one of the stocks that I've been watching. Microsoft right now is at $510. It was trading at $555, so it is on sale. What I'll be watching this week is to see if Microsoft is going to break below the level at $495. If Microsoft breaks below $495, it could come down to about $475. After $475, you got $463. And again, if we're using the same method, let's look at price range. We can start at the top. And we can see that, okay, right now Microsoft is down about 11% from the top. If Microsoft comes all the way down to this 462, Microsoft will be down at about 16%. If Microsoft comes down to this gap, Microsoft will be down about 23%. So right now, Microsoft has entered like its correction territory. Do I think that Microsoft is going to go lower? Potentially. If the market continues to push the way that it's been pushing, and again, this is the end of November. We're going into December. If you don't know, when you go into December, you have to be very careful with the market because there can be sharp sell-offs because people are going to be harvesting for taxes, right? Because you have up until, the last trading day of the year to either sell or do whatever you're going to do to your portfolio, because whatever your portfolio closes at, you're going to have to deal with the tax situation in March or February, whenever you file your taxes. So with that being said, I'm keeping a close eye on Microsoft. When I first started trading, again, Microsoft's I think like $180. Right now it's 510. So I know that Microsoft can grow. Also, Microsoft pays a dividend. And again, the whole AI trade of all this AI stuff falls apart because it's not seen as profitable as people thought it was. I'm going with Microsoft for sure. So the levels that I'm watching this week, again, 493. And the question maybe, is Microsoft buyable right now at 510? Sure. I bought Microsoft higher than this before. So Microsoft buyable at 510 is just, again, same thing. Keep cash on hand because we are in a territory to where the market could have a sharp pullback to where the people with the cash is going to be able to buy up the stocks, right? So stay ready so you don't have to get ready, right? All right, let's keep it moving. Meta is the next one. So if anytime you see I have a whole bunch of lines on my chart, that means that I've been watching this stock a lot. So right now, Meta is at $609. Meta used to be at $795. And so if we look at, where's my forecast tool? If we look at the price range from the top, so Meta was up here, Meta is down here now. Meta is down about 25%. Can Meta go lower? Sure. Meta, there's no limitations on how low a stock can go, but you always got to have this question. Is Meta going out of business? No, not even close. But is there a nice opportunity on Meta? Yeah, Meta's down 26%. So if somebody came to me and said, hey, you know, what do you think about Meta? Meta pays a dividend. Meta has really great products. Like when I went to Japan, I used the Meta AI glasses to like take pictures and record videos, and it was great. Like I was driving go-karts around Shibuya in Japan, and I didn't have to use my phone. I was just able to hit a button or speak to the glasses. It was able to record. So really nice polished products from Meta. And then again, Meta owns Facebook, Instagram, WhatsApp, you name it. So is Meta going out of business? No. Is this a good opportunity to start looking at Meta? Sure. And Meta could go lower. So if Meta breaks this 580, so the lowest point I have right now for Meta is 580. If Meta breaks 580, what we'll be looking at is a drop down here to about 545 to 550. If Meta breaks that, then I got Meta coming all the way down to 510. The lower that Meta goes, the more I want to buy it. Because again, do I think that Meta is going to be done? No. I remember when Meta, let me scrunch up the chart just to show you something. So this is in 2023, right? This is just what, 2 years ago. Meta was $86. Today it's $609. At a high, it was pretty much $800. It was $4 or $5 away from being $800. So from, if you bought it, let's say we were around this to 80, this is pretty much 10x in 2 years, right? This at the, if you would have bought at the bottom, right? The bottom is about $80, at the top is about 800. That's 10 times your money in 2 years. But again, is there a major opportunity here? Yes. Again, especially for newer people. But Meta right now, $609. Like I said, don't be intimidated by the price. You can buy bits and pieces of stocks. But yeah, this is one of the ones that I'm watching. And then we have Apple. I'll save Bitcoin for the Discord. Also, I can get you a free link to the Discord. So before you leave, just grab that link. All right, we do have a goal to add 100 free members per month. And we're sticking to that. So we're going to go ahead and get you added. Also, we're going to have some Black Friday deals coming up. So if you're in the Discord, you're going to see and hear about that stuff first before we announce it in, you know, any of our public sessions. But Apple is another one. Really like Apple. Apple back in April was what, $170. Apple today is $272. So $100 gain on Apple. And Apple is actually holding up well. Like everything else is kind of falling apart. Apple was being a trooper. So I really like Apple's position. Apple right now is trading between $267 and $275. So the level that I'm watching for Apple this week, again, downside is going to be 267. If Apple breaks that, Apple could be coming back down to 262. Apple breaks 262, it could be coming down to 257. So I got Apple. Worst case scenario, Apple may pull back like $20. That's nothing. That's okay. And then to the upside, if Apple breaks this 275 level, then I have Apple continuing its journey up to 300. So Apple has tested this level here 1, 2, 3, 4, 5 times and could not break. So again, that could be the Fed meeting that we have on Wednesday. We get good news. Apple pops up and try to test this level. But if you see Apple above 275, we get a close above 275. Apple is going to continue at all-time highs. And then we could see Apple continue its journey up to about $300 per share. So Apple is nice. Again, pays a dividend and is holding up fairly well in this really choppy market. So those are the picks that I have for this week. We will have more picks posted in the Discord. And let me hop over to the chat and I'll grab some picks from you all. All right. Yep. Ross says 382 billion. They just bought Google. Yep. Yeah. Again, Berkshire, almost 400 billion in cash. I mean, You want to go at the bank on this one, right? All right, so we got, let me see, we got a few of these in here. I won't be able to get to them all. So let's look at Bull. This is, I think Bull is what, Webull? Yeah, Webull. Cool. Webull, when it first hit the market, it hit the market back in what, April? It hit the market kind of at the wrong time. Webull had shot up, skyrocket. I mean, I had to scrunch my chart up to even see the top. It went up to like what, $80, and then it came back down, and now Webull is sitting at $8. So crazy pop at IPO. So if you've never traded the IPO, sometimes when companies first hit the market, there's a lot of people that buy in, a lot of short interest that sends it up, and then it finally cools off and normalizes and come back down to, you know, the level that it should be at. So right now, Webull is at $8.63. Where do I see it going from here? Let me check my chart. So right now, Webull is sitting low. The RSI is about 25.26. So that means that it is oversold technically. Check the MA ribbon. Yeah, MA ribbon has got it pushed down. So if it does pop up, it could go back up to $10 for the short term. And then we do have earnings on Thursday, November 20th. So again, not financial advice, but what I would do is keep my eyes on Webull and see what they're going to do for earnings, because earnings, this is kind of like the report card for your stock, right? Every stock that's publicly traded has to report earnings. And so if the earnings come out nice, then the stock is going to go up, right? And what I mean by nice is that every company has estimates, right? This is a Wall Street given estimate. So they're estimating that Webull is going to come in at this number as far as earnings, and then revenue is going to come in at this estimate. So the only thing that has to happen if Webull comes out and they beat these two numbers, if they beat the earnings estimate and they beat the revenue estimate, the stock should go up, right? If they miss, the stock should go down. That's normally how it works. And I'm saying normally with air quotes because sometimes you may have like a CEO step down and the stock go up, or you may have them announce a new product and the stock goes up. So there's a lot that can happen, but normally, air quote, the estimate here needs to be beat. The revenue estimate here needs to be beat. And as long as these are beat, they're good. So what you don't want to happen is that you jump into the stocks too soon and then it tanks, right? The earnings come out, they don't beat the earnings, and then the stock goes down even lower. So right now the stock is at $8.63. So let's talk about both sides. So if this stock beats earnings, it can shoot all the way up here to about $13.52 because earnings can actually do that for it. Now, just, you know, moving throughout the week, this could go back up to $10. And if we look to the downside, scrunch it up, this is the lowest it's ever been. So I can't really say. I can say that if we're using psychological levels, let me see, 11, 9. So yeah, this can go back. This can go down to like $5 or $6 to the downside. So I got $5 or $6 to the downside if this keeps going. And then I have $13 as a maximum high for right now. Let's say it performs flawlessly for earnings. I got $13.50 for the high to the top side. And that was for Goddess. Does that help?
Yes, thank you.
Perfect, no problem. All right, cool. I'm just gonna pick another random one because we're running out of time. We got what, 6 minutes. Let's look at Netflix. Netflix has a split coming up, and I think this is good information for the new people to know as well. All right, so let's look at Netflix stock price. Netflix is currently trading at $1,100 pretty much. $1,112.17 in USD. That's what Netflix is trading at. Netflix, they have a split coming up. So if you don't know what a split is, let me click on this S. So this, anytime you see this S on TradingView, that stands for split. E stands for earnings. And if you see a D, that stands for dividend, right? So Netflix doesn't pay a dividend, so you don't see any D, but you see an E for earnings and you see an S for split. So we click on the split, we can see that Monday, so tomorrow when the market opens, Netflix is going to split by 10. So that means that the stock price is going to be divided by 10. So Netflix should trade around $111 instead of trading at $1,100 because they're doing a split. Now, why would a company do a split? Well, a company would do a split for just the optics, pretty much. Doesn't do anything to the valuation of the company. Right now, Netflix is like anywhere between $470 to $500 billion. And this split by 10 is not going to chop up anything. It's not going to do anything on the back end. It's not going to do anything to their financials, to their earnings. But what it's going to do is just make the shares look more affordable, right? Because if you're a new investor and you're like, okay, I like Netflix, I like Apple, and I like Meta. You know, Apple is $272, Meta $600, Netflix $1,100. I'm gonna go with a cheaper stock. I might go with Apple because it's cheaper, right? So, which again, we got fractional investing, so you can buy whatever. But Netflix, when they get chopped down to $100, more people may grab Netflix because it's only $100, right? Versus, you know, Apple at 270, Meta at 600. And I think that Meta's going to do a split too. I don't know when, but Meta has never split. So Meta right now is at $600. They've never split in the history of the company. So I think that at some point they're going to have a split coming through. But yeah, so Netflix is going to be trading at $100 tomorrow. What do I see Netflix going? So right now, Netflix has support at about, this would be 108 tomorrow, but it's 1085. If it breaks this 1085, then it can be coming down to about 1,000 even, which, you know, tomorrow's price is going to be $100 even. And then if it moves up, Netflix could be moving up to 1164, which again, tomorrow's split will put that at about 116, 117. So that's what I'll be watching for Netflix. Both ways. Again, I just play what the market gives me. I'm not married to the stock in one way or another. If the stock moves up, I'll take it. The stock moves down, I'll take it. I know how to play both sides of the market. So that's what I see for Netflix going into tomorrow. Any questions? Let me check the chat. Cool. All right, yeah, so I won't be able to get to all of these today, but if you are in the Discord, I can look at a few of these. I am going to be, again, I'm ramping back up from coming from Japan, but I should be more on it tomorrow. But yeah, if you have any questions about any of these tickers, I'll be looking at them tomorrow. And with that being said, let me stop the stream, stop sharing my screen real quick, and then I can get you all some links. All right, appreciate it, YouTube. Stop stream. All right, how do you buy partial stocks? Good question. So to buy partial stocks, what you're just going to do is, let's